Welcome back to my final daily report market analysis video with me, Richard, market analyst at Hantec on Tuesday the 21st of April. Looking at this gold chart, which is a really interesting move actually. We saw early morning today that gold was actually holding up fairly well. And then as the European session has taken on, we started to see risk appetite really plummeting through equities, and that has now started to drag on gold. I discussed in my analysis on the website this morning that whether this was a moment where gold was starting to regain its safe haven status. Well, gold falling, equities falling, yeah, you wouldn't say that that's pretty much a safe haven move, would you? So you'd see that gold breaking down below 1671. That's an interesting move in itself. That 1671 was the top pattern implied from the breakdown of this period here. 1666 was the max that, more I should say, the bearish downside target from that top pattern, and that has certainly now been breached and been achieved, and we're now starting to see that not only is this is the breakdown that we've seen of the support, we're starting to see sort of question whether this is, I suppose, head and shoulders top pattern. That would be the fear, I suppose, but at the moment we're still treating this, I think, as just a near-term corrective move, and breaching 1671, certainly if that does that on a closing basis, that opens 1640, and that sort of brings you back towards 38.2% fib area. So that is the risk now, I think, or the growing risk certainly, that you see a move back to 1640. If this is a little head and shoulders top pattern over the past 2 weeks, actually, you'd start to you do 1671 measured from 1746, which is there or thereabouts, sort of 70 odd bucks, $75 of downside move. So perhaps even $1,600 becomes your target, and that's, again, that coincides with 50% fib area. So it'll be interesting to see how this one develops. Clearly the support is not ready yet in this corrective move on gold, and the little rebound today has actually just been used as another chance to sell. The resistance of 1702, the neck or the old pivot line, has obviously weighed on the sentiment today. Negative momentum indicators set up as well, and turning downside on MACD. So as I said, a closing breach of 1671 really does put you to at least 1640 area as the next target for the downside, and then we'll start to reassess, as that being the next Fibonacci area, 1633. We then start to reassess the next potential for support, but obviously this correction is not done yet. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.